This video is sponsored by Masterworks because I need to get paid in order to compensate for my losses on Coinbase stock. Click the link in the description to learn more. Squad, today is April 12th, 2022. My once proud Robinhood 3K challenge account has been dormant for months. Although I had some fun with this, I stopped doing the challenge because no one was watching the videos. And this was selfish of me. I know a lot of you guys discovered me because of this series and were sad to see it go. The time to start again is now. My only request is that if you like this series, drop a like on the video. I hate asking for likes because it's really tacky, but it helps the algorithm and I want my former viewers to know I'm starting this series again. As for where this account stands now, it's had some life sucked out of it. Sitting at about $4,300, it's $1,000 off its highs from Christmas. Although this account more or less followed the market, I've managed to load the thing with COVID stocks like Snap, which got slashed 50% in the last couple of months. I haven't done a lot here, but I did buy a $5 put on RSX, that's a Russia ETF, once the war broke out. I also continued wheeling Bitfarm, but with crypto tanking, this position is performing like garbage. The $5 a month I get from covered calls is not even close to making up for the losses on shares. My RSX put is up 178%, but RSX is now delisted. And now I take that personally because I should be able to trade out of this put now that it's worth $5. I doubted the people that said this would happen, but now here I am looking like a dumbass. And potentially even dumber, I bought 1/10 of a share of Sam, that's the Boston Beer Company, to honor viewer Sam Kling, who won the stock vote twice in a row. I bought a year ago on April 16th at literally the very top. Now I'm down 70%. I've got some work ahead of me to clean this portfolio up. This account rusts away in decay as we appear to enter a bear market. It's time to bring this challenge back and make some money. Let's get to work. Alright, never mind, I waited 2 more weeks because of Easter and my brother-in-law's wedding, but now I'm ready. It's April 28th and the market is not looking so hot. My RSX put did expire worthless even though it was $5 in the money due to delisting. I'm pretty upset about that. But there's no sugarcoating it. The everything bubble is bursting and bears are in control. There are starving bag holders in the world and I don't want to be one of them, so let's short the market. SPY is trading at about $420 right now, but there's no room for 420 jokes. 2 minutes into open and the market is already selling off. I'm going to open the options chain to May 13th, that's about 2 weeks out. Options are really expensive since IV is so high. Since I only have $380 of buying power left, I'm going to open a call credit spread instead of a long put. That'll give me bearish exposure for a much lower cost. I'm going to sell the at the money call for $966 and then buy 2 strikes out of the money for $852. This will give me a credit of about 116 and a max loss of 84. This will give me a 423 by 421 call credit spread, and I don't need the market to continue declining to make money off this position. As long as SPY doesn't rise back up, and I don't think it will, this should be an easy clap. Let's give our spread some time to work and check back in later. While we await some cash flow from Papa Bear, allow me to introduce Masterworks, the sponsor of this week's video. Those of us experiencing our first real bear market since 2008 are likely finding that buying calls on tech stocks is no longer working like it did during the COVID bubble. For a couple years, diversification took a backseat to rampant speculation, and now a lot of us are getting caught flat-footed. In this new environment, it's time to branch out and get our investments in order. Masterworks makes it easy to extend our investments beyond equities by grabbing a piece of the exclusive fine art market. With just a few clicks, we can easily invest in iconic art by names like Banksy, Monet, and Basquiat. If you're skeptical about investing in fine art, consider this. Contemporary art pieces outpace the S&P 500 total return by 164% over the last 25 years. And this art has delivered price appreciation over 23% during times when inflation was 3% or higher, like it is right now. With Masterworks, it's easy to get a piece of the $1.7 trillion art market pie. After making an account, we can browse a library of fine art and invest in a work of our choosing. By electing to invest in an artwork, you are buying shares of an LLC created explicitly to purchase that artwork. When Masterworks acquires the painting, you own a piece of it and can await price appreciation until Masterworks sells it later and you receive your cut. Or for those that want their money sooner, you're invited to buy or sell on Masterworks' secondary market, in which you can trade your fraction of artwork to other investors. Masterworks is the only platform that lets you invest in multi-million-dollar artwork in this manner and take your piece of what BlackRock CEO Larry Fink called the greatest store of wealth today. And in times of high inflation, contemporary art typically performs head and shoulders above equities, commodities, and real estate. This is due to fine art having a lower correlation to these other traditional assets. There's normally a waitlist to get into Masterworks, but you can skip the line and immediately start investing if you use my referral in the description. While your friends dunk on you for buying Peloton at 130, be sure to remind them you're the only one who owns an original Picasso. Check out Masterworks today. Fast forwarding again here, it's Friday, May 6th, and the market just made a new 52-week low, which means I also made a new 52-week low. The only thing going for me is this call credit spread on SPY. I'm up 50% on this bearish position, but overall, my problem here is that I'm not bearish enough. My portfolio holdings are still very bullish, and these trash bubble stocks are just weighing me down. I mean, do I really need Snap or Lyft? All these things are doing is taking up buying power. It's time to take out the trash. So all these broke-ass companies, especially those with pitiful ratings on Seeking Alpha's quant, they're getting liquidated. Snap, I'll say it's been nice since I'm actually still green on this one, but it's just letting me down lately. Oh shit, I almost bought more, hold on. Okay, gone. Triple Q, I'll keep. AT&T, I'll keep for now. Nuva, goodbye. I'm gonna take my $55 of cash and add it back to my buying power. Lyft, this one's definitely gone. No one uses Lyft delivery. It's all about Uber Eats and their $15 of free food each month. Lyft does me no good, and neither does their stock. Gone. I want to warn that if I'm selling everything at the bottom here, let every man know I display my stupidity with bravery. American Airlines, we've had our ups and downs, but it's time to wrap this one up. 8 shares, gone. YOLO, my cannabis shares, this isn't your fault. I was expecting Sleepy Joe to make some moves on cannabis. I was up big on YOLO, but didn't sell, of course, and now I'm down 57%. But with midterms this year, I'll hang on a little longer and see if Democrats push for legalization one more time. They'll need the votes, because they've basically done nothing else this entire time. iPod I'll keep for now because there's rumors it'll merge with Elon's Starlink. I think that's bogus, but I'll wait to see if there's a pump before I sell. It's at net asset value anyway, and therefore massively outperforming the market right now. Lionsgate Entertainment, producer of PG-13 action movies, definitely ditching this one. That's gone. Sam, I bought this one in honor of viewer Sam Kling on literally the highest price this stock ever reached, the absolute crest, and now I'll put it behind me at a 71% loss. Good thing I only bought a tenth of a share. Coinbase is performing like shit, but I'll hold through earnings next week. Hopefully they've got something good to say, and they really needed to bring back some market cap. LRCX, that's Lamb Research, I love you, but 0.02 shares is just clutter. I gotta cut it. Bitfarms, you can stay for now, but you're on thin ice. If you don't get back above $3 by next week, you're gone. Bug, my beloved cybersecurity ETF, if Putin doesn't do a cyber attack by the end of May, I'm gonna be done with you too. Alright, that was therapeutic. I've got almost $900 in buying power now, so I'll be looking to leverage this for more bearish plays. The market is about to close for the week, and I need to go get my 2-year-old some chocolate milk before she kills me, so I will return to this on Monday. Alright, it's Monday morning, May 9th. My SPY call credit spread at 421 by 23 is looking sharp, up 75%. Since it's expiring this week, I'll be looking to close once I'm at a $100 gain, which will be about 86%, so I don't get J-Powed at the last minute. But right now, I'm going to add another bearish play, this time on Triple Q, the NASDAQ ETF. I really want to buy a put, but premiums are so high right now. Even a put expiring in 7 hours needs a 1% decline to just break even, and it would take up a third of my buying power. I am much more comfortable with a call credit spread expiring at the end of the week. So I will open an at-the-money $1 wide spread 303 by 304 for about $55 credit. Normally I'd trade with a little bit more time to expiration, but with only $45 of max loss, I'll take my chances. Since Triple Q is dropping pretty fast and I really want to get a fill here, I'm only going to ask for 51 cents. So let's go ahead and submit. And I have a feeling I'm going to get a fill pretty fast. And alright, I got my fill, we're in. Stocks are way down today. I'm glad I dumped shares last week, but I should have done more. If you told me a year ago that Coinbase will trade for $95 in May of 2022, I would have assumed that the stock split. The CEO, Brian Armstrong, better have something good for me tomorrow at the earnings call, but I doubt it. It looks like there's going to be some Q&A, and I love this question. What are management's plans to regain market cap? In other words, your stock is tanking, and what are you going to do about it? Fast forward to the afternoon, SPY is still dumping, and my portfolio is back to January 2021 value. But my SPY call credit spread is about to be up $100 where I'll close in a few minutes. But Bitfarm, I'm just not feeling it. The covered calls have barely iced the wound from this one. It was just a bad investment. It's time to take the L. I'll close out my covered call for an $8 gain, and then dump these shares, for $524 of deadweight loss. I probably only made about $40 or $50 overall on covered calls. Huge loss here, biggest I've taken in this account. Let's come back now and close this SPY call credit spread. Being up 85% with the rest of the week ahead and CPI coming out on Wednesday, I think it's best to close here instead of waiting for that last $15. If CPI indicates inflation is actually dropping or JPOW says the printers are back on, we're going to see the market bounce. So I'll ask for $99 gain and I'll await my fill. However, I am still holding that QQQ call credit spread where the max loss is only $49. So however this week goes, I'll come out with a gain at least on these options specifically. So let's hold tight and see how the market responds to the CPI report on Wednesday. Alright, we're getting toward the end of the week here. It's Thursday, May 12th. Yesterday, the market very briefly bounced in the morning when April's CPI came out at 8.3% year over year. That's a little better than March's data of 8.5% year over year. For the 5-year-olds watching, this means that the market was excited that it looked like inflation was slowing down. But everyone quickly realized that the reason we had 8.3% year over year instead of 8.5% is because if we look at a year ago to March and April 2021, we can see that's because the CPI was up about 55% between those 2 months. So when you're comparing April 2022 to April 2021, and the best you can do is come up with 8.3% instead of 8.5%, you're actually showing acceleration in inflation, not deceleration. Once this reality set in, the market started selling off again to close red on Wednesday, and here we are on Thursday with more blood on the screen. I think it's safe to say my QQQ call credit spread is going to expire worthless, so I'll just let it ride into tomorrow's expiration. But right now, I want to commit the SPY call credit spread gains toward energy transfer, ET. Energy is one of the only strong sectors this year, and I want to continue building out my position in this dividend-yielding company. So with my $99 gain from the SPY spread, that will afford me 9 shares and bring me to 26 total. Assuming QQQ doesn't go up $18 tomorrow, I'll take my $51 gain from that QQQ call credit spread and buy 4 more shares for an even 30. I may or may not enter another spread tomorrow depending on what the market does. I may just wait until Monday to open a new trade so I can make this video now and publish it over the weekend. My goal for this series would be to publish every Saturday, so we'll see if I can make it. In any case, I hope you guys enjoyed. I'll see you next time where I'm pretty likely to go full bear mode.